Indeed, there is speculation in the market that you might be keeping rates on hold all the way until 2023. How likely a scenario do you think that is?
It probably wouldn't be prudent for me to comment on what the Monetary Policy Committee is likely to do at its future meetings. But what I can say is, if you look at our latest MPC press statement at the last Monetary Policy Committee meeting last week, what we noted was that yes, the downside risks to growth have decreased in Thailand. The impact of Omicron was less severe than we had expected. Yes, the upside risks to inflation have increased largely as a result of higher energy prices. But overall, we felt that financial conditions in Thailand were sufficiently accommodated for growth as it stands at present. And so it was a unanimous decision to keep the rates at 0.5%. And in terms of the outlook, what we said was that in terms of the three objectives of under our flexible inflation targeting framework, looking at price stability, looking at growth, and looking at financial stability, the weight or the onus of primary attention to still be focused on trying to sustain the recovery, which is happening, but is somewhat weak and uneven still.
Why do you feel that price pressures could ease in the latter half of this year?
There are a couple of reasons for that. Our baseline expectation is for energy prices to start to come down in the second half of the year. Again, there's a lot of uncertainty associated with that. There's a lot of uncertainty on the geopolitical front and whatnot. But regardless, we still feel that the overall inflation rate for Thailand is likely to stay within our band of 1% to 3%. This last month in January, the previous month in January, yes, inflation came out higher than the upper bound of our target range. It came in about 3.2%. But if going forward, we still think that it's likely to be contained and that we're not likely to see the kind of high inflation rates that we've seen in developed country markets. Why? First off, if you look, the price increases, the inflation rates that we've seen the pickup in have been fairly concentrated. It's not a broad-based price increase. It's been concentrated largely in the energy space and with certain kinds of important food prices like pork and other kinds of meats, but certainly not the kind of broad-based inflation that we've seen in developed markets. And secondly, we haven't seen yet instances of second round effects. And we think those are likely to be more limited in the context of Thailand, where labor markets still remain quite soft because we're an economy, again, that relies heavily on tourism, and the tourism recovery is going to lag. So wage pressures are going to be quite low. And if you look also at inflation expectations, despite the increase in headline inflation rates, inflation expectations based on the latest surveys, whether you look at the household sector or the firm sector, still remain quite anchored and well within the Bank of Thailand's inflation targeting range.